Is the tourist money finally gone from Hims stock? Or are we still watching a battle between conviction investors and engagement-driven bears who are chasing clicks instead of facts? That's really the question after this earnings call, because what we just witnessed was not a weak report, not a slowing company, and not a collapsing growth story. It was a fundamentally strong update that is still being misrepresented across social media by people who either did not read the footnotes or deliberately chose not to. The biggest frustration right now revolves around guidance, specifically the claims circulating on X that Hims only guided for roughly 5 to 6% growth because they included Eucalyptus in the numbers. That statement is factually incorrect. If you actually read the earnings release and go through the footnotes carefully, it explicitly states that the revenue guidance excludes any contribution from the recently announced Eucalyptus acquisition. Management also clarified on the call that if the acquisition closes early in the first half of the calendar year, they could recognize up to $200 million in revenue from Eucalyptus during that period. So when you see the guidance range of $2.7 billion to $2.9 billion, you have to understand that this range does not yet incorporate that additional revenue stream. When you layer that $200 million on top, you are not looking at 5% growth. You are looking at something closer to the mid-20s on the low end and potentially above 30% on the high end, especially considering that Eucalyptus itself has been growing at triple-digit rates. The math is not complicated, but it does require intellectual honesty, and unfortunately, a lot of engagement-driven commentary thrives on ignoring exactly that. Beyond the guidance debate, there is still massive confusion in the market about Hims' weight loss business, particularly the tendency to equate the entire weight loss category with GLP-1 drugs. That oversimplification misses the broader structure of what Hims has actually built. Management clearly stated that their weight loss offering reached a $100 million revenue run rate in under 7 months, and that figure excludes compounded GLP-1 products. When the category initially launched, it was not centered around injectable GLP-1 therapies at all. Instead, it focused heavily on oral medications such as metformin-based and bupropion-based formulations, often combined with topiramate, customized through their MedMatch system. These medications are commonly prescribed off-label for weight management, which is a legitimate and well-documented practice in modern medicine. Metformin, originally developed for diabetes, has long been associated with weight loss as a secondary effect. Bupropion, typically prescribed for depression or smoking cessation, also has weight reduction properties. The idea that these treatments are fringe or illegitimate simply does not hold up when you look at mainstream clinical guidance. Furthermore, the GLP-1 landscape itself is more nuanced than many critics acknowledge. While semaglutide receives significant attention, a large portion of the current GLP-1 market is dominated by tirzepatide. Hims has never compounded tirzepatide, and that distinction is critical when discussing regulatory risk. They have focused on semaglutide along with generic liraglutide, which is off-patent. Weight loss at Hims also extends beyond prescription medication entirely, including nutritional guidance, protein products, educational tools inside the app, and broader metabolic health services. Reducing the company's identity to just GLP-1 ignores the multi-category structure that includes sexual health, hair loss, mental health, hormone therapy, longevity services, and lab testing. This is a diversified consumer health platform, not a single drug bet. The regulatory concerns surrounding oral semaglutide were also addressed directly on the earnings call. Management explained that after working on the product for months, they had conversations with regulators and, based on those discussions, chose to remove it. That suggests responsiveness rather than defiance, and it potentially reduces near-term regulatory overhang. As for the broader lawsuit narrative, the projected timeline extends years into the future, potentially into 2029 or beyond, with appeals pushing it even further. The legal system operates slowly, and the competitive landscape in metabolic medicine could look dramatically different by then, particularly if next-generation therapies like retatrutide receive approval and shift market demand away from today's leading compounds. What makes Hims fundamentally different, however, is not just its drug portfolio, but its operating philosophy. CEO Andrew Dudum emphasized that Hims is a consumer-oriented, customer-centric company. That distinction matters. Traditional healthcare in the United States is fragmented across separate entities: physicians, pharmacies, insurers, and labs, each taking a margin and creating complexity for patients. Hims integrates these services into a unified digital platform with transparent pricing and subscription-based access. Instead of charging separate visit fees and surprise bills, the cost structure is bundled and visible upfront. For many Americans who spend thousands annually on copays and deductibles, that model can represent meaningful savings and simplicity. Transparency, convenience, and privacy are powerful drivers of loyalty in a system where opacity has long been the norm. The vertical integration strategy goes even deeper. Hims has expanded into labs, invested in diagnostic technologies, and signaled interest in wearable integration and advanced data analytics. Their MedMatch system already functions as an AI-driven recommendation engine, processing questionnaire responses and clinical inputs to suggest personalized treatment options that physicians then review and approve. As this dataset grows, now encompassing millions of customers, the potential for AI-driven insights increases significantly. The aggregation of longitudinal health data, lab results, prescription responses, and behavioral inputs could enable predictive modeling, customized formulations, and increasingly precise treatment optimization over time. In a healthcare environment where data is often siloed and fragmented, a unified consumer data set becomes strategically valuable. Critics often argue that growth through acquisition is inherently negative, but that depends entirely on scale and valuation. Massive, over-leveraged mergers frequently destroy shareholder value, but smaller, strategically aligned acquisitions at reasonable multiples can accelerate capability building and geographic expansion. Hims' acquisition of Eucalyptus fits the latter category. A growing asset purchased at a valuation that appears disciplined relative to sector norms. History shows that many transformative platforms expanded through early, targeted acquisitions rather than massive, overpriced deals. When you step back and look at the full picture, diversified revenue streams, expanding categories, customer-centric pricing, vertical integration, AI-driven personalization, and disciplined acquisitions, the narrative becomes far broader than the narrow GLP-1 debate dominating short-term commentary. The company is positioning itself as a long-term disruptor in consumer healthcare, blending technology, data, and affordability into a model designed for recurring engagement rather than one-time transactions. That is why the conversation should not revolve solely around whether semaglutide volumes fluctuate quarter to quarter. The more important question is whether a vertically integrated, AI-enhanced, consumer-focused healthcare platform with millions of users and expanding global reach has the structural ingredients to compound over time. For investors willing to look beyond headline volatility and social media noise, that larger thesis remains intact, and arguably stronger after this earnings update than before. Before we wrap up, I want to make something very clear. This video is for informational and educational purposes only and reflects my personal opinions based on publicly available information. I am not a financial advisor, and nothing in this video should be considered financial, legal, or investment advice. Investing in individual stocks involves risk, including the potential loss of principal. You should always conduct your own research, review official company filings, and consult with a licensed financial professional before making any investment decisions. Any forward-looking statements discussed in this video are speculative and subject to change based on market conditions, regulatory developments, and company performance. Please make your investment decisions responsibly.